a huge little fall there recently. I'm not actually too sure what happened there, but the valuation looks cheap on this company. They're trading at a 15 PE. Yo, for you guys, I just started the YouTube stream. What's up? Hopefully you'll watch this all the way through. We're just going to be looking at over 20 stocks plus to look at. So hopefully you'll find one you can maybe add to your watch list. I'll go over some that I like, and I'm just looking at all the people here. We're streaming on TikTok and YouTube right now. So anyway, they're consistent with their net income. They make like 600, 700 million of net income a quarter. That's a lot of net income. Do they pay out a dividend? Yeah, very small dividend, very low payout ratio. This one's interesting. Like, I wonder why they fell like crazy right there. The valuation's low. So it's kind of like a mixed bag there. I want to go over one stock real quick. I think that's really cool. We've all probably heard of this company before. It's Duolingo. Did you guys know Duolingo is publicly traded? And check this out. They just gapped down. I think this one might be a maybe buy the dip opportunity because of this right here. Look at their subscription business on a quarterly basis. It's up 50% year over year. I mean, this is some incredible growth. You know, the subscription revenue is growing like crazy. The FCF, which is free cash flow, is up to 80 million, up 79%. They're making net income every quarter. So anyway, Duolingo is a really cool stock in my opinion, and they have no debt. Duolingo is a debt-free company. I actually have a watch list here. Yeah, I have a watch list of stocks with no debt. All these companies right here. But let me go to my Robinhood account real quick. Yeah, someone said Robinhood stock. Yeah, I'm a customer. I have a Robinhood portfolio. We're up 0.5% the past hour. If you guys own stocks, I'm guessing tomorrow will be a really green day. And look at my watch list right here. The SPY, NVIDIA, QQQ is all up. Crypto's doing great. Oh, yeah, we have our Roth IRA. We have a share of Amazon in there. So, yeah, if you guys got any questions for me, let me know. Like, look at us the past month. Like, yeah, we're up 0.5%, but still we're down 6% in 1 month. I just like being fully transparent. Yeah, like I see a lot of other TikTok live streamers. They don't show their losses or anything. Check out this portfolio. We're down 14% all time in here. So yeah, none of this is financial advice. Always do your own research. Yeah, check this out. AMD's finally up. They're up 1.25%. Let's see. Oh, we gotta. All right, there we go. What up, Josh? He says OSCR is fire. So yeah, this is Oscar Health. This is like an insurance company. OSCR. Yeah, so this is what's fascinating to me. Check this out. They have some of the most insane sales growth I've ever seen. Look at this. In 2019, the sales were $500 million. Well, in the most recent year, full year 2024, it was $9 billion. You know, that's incredible growth. The sales are up 67% year over year. So that's what's mainly impressive. But look at this right here. This is why I think the stock is kind of flat on the 1 year. They're actually losing money. They just lost $150 million in the most recent quarter. So I'd like to see this company get back to net income positive. So there we go. OKLO. Or wait, I want to look at Hood real quick. So, yo, Josh, he said Robinhood stock. Yo, let me show you this right here. We do own 5 shares of this stock. I don't own much. I actually sold a lot of this stock, and I regret all the shares that I sold. But check out the incredible growth of Robinhood right here. Just look at the total revenue, just their sales right here. It's over $1 billion in the most recent quarter. It's doubled from the previous year. Now, that is very respectable. But look at the net income. They're actually very profitable now. Like if we zoom out, they used to lose net income every quarter. Now they're making net income every quarter. So people are starting to really take Robinhood serious, you know. The stock used to be a joke. Let's see here. FSLR. What's up? Hey, G, I have a video. I go over all my favorite apps if you want to check it out in the link tree in my bio. Anyway, here's First Solar. This is a solar panel stock. The reason it's fallen recently is actually because of, I believe, tariffs. Tariffs are going to be really bad for this company, but look at the valuation. They're literally trading at 11 times net income. That's a very low valuation, but look at this net income they make. It's incredible. They're making 200 to 400 million of net income every quarter. And, they don't pay out a dividend either. So they just retain that cash. They do buybacks as well. So yeah, this is a solar panel play. I actually kind of own a different one. I actually own Enphase Energy. It's kind of similar. The Enphase Energy stock is in the toilet. Look at this. So yeah, but I do own them. Not much. And they see for these risky kind of stocks like Super Micro, Robinhood, you don't want to have a ton of your portfolio in them. Yo, what up, Austin? He said, can we look at Hims? Yeah, dude, this is a popular one. I always thought they were a meme stock like Hims and Hers, but the fundamentals are incredible here, and they blew me away. First off, this company has no debt at all. This stock is debt-free, so that just takes some risk off the table. It's not always like buy the stock because they're debt-free, but look at the sales. This is ridiculous. It's up 95% year over year to $500 million. So $500 million just in the most recent quarter is ridiculous, and out of that, they made $60 million of free cash flow, $26 million of net income, no debt. They're growing their assets. How much cash do they have? 300 million of cash, up 100 million from the previous year. So anyway, I like the fundamentals there. What do you think of military stocks like LMT? Yeah, dude, I like LMT and GE Aerospace. You know what? I'll go over Lockheed Martin really quickly. This one's a nice dividend play. Check this out. If you're looking for a high yielding dividend stock, you get a 3% yield here and a healthy payout ratio, 57% payout ratio. But look at how diversified they are. You know, they're in aeronautics, rotary. They sell. They're in the space. They sell missiles. So most of the revenue comes from the U.S. But yeah, that one's a nice dividend and buyback play. How's the Robinhood portfolio doing? Yeah, check out our Robinhood portfolio. The market just opened, 20 minutes ago. So we're up, like 0.5%. Seems like the market is green. We'll open green tomorrow, which is great news. Here's our Roth IRA. We got one share of Amazon in there. But yeah, Google, it looks like big tech is green, like QQQ right here, up 0.7, Apple's up. So yeah. Is there a minimum shares you need? No, you can, no, not, yeah, Josh, no. Uh, yeah, Arthur, it's because the market just opened. There must have been some good news over the weekend. Yeah, let's check out. Look, the market's open over here as well. So, like Symbiotic, AMD's up 1%. Hey, again, not financial advice. Don't listen to me. We're down 14% all time in here. I just like being transparent with you. Uh, let's see here. Yeah, if you guys got any stocks you want me to look at, let me know. We'll check them out. The market's open on the overnight market. So like if you wanted to, here's what's so cool about Robinhood. I could buy or sell a share of Google. I could sell all my Google right now if I wanted to. That's what's cool about the overnight market. Oh, so here we go. Here's a cool one, Lyft. Yeah, so I really like Uber right now, but I'll check out Lyft for you. So this stock has not done too good. So I feel bad if you own them because the stock is close to an all-time low. But check this out. Here's the good news. They're growing very nicely. Look at their revenue quarterly. Look at this. It's at a new record. It's up 26% year over year. So I'm loving the growth here. And out of that, look at the FCF, which is free cash flow. The year over year growth is crazy. They're making 300 million of free cash flow a quarter. And check out the net income. Look at this. If we zoom out, they used to lose so much net income every quarter. They were even losing over 100 million a quarter. But now they're finally making profits, 61 million of net income. That's fantastic. So that's what's really cool. Lyft is like Uber's competitor. Yo, what up, Aiden? CCNB stock. What's this one? Coastal Carolina Bank shares. So yeah, this one's only worth, if you look in the top right, they're only worth $70 million. So this is a very small company. I'd be careful just because of that very small market cap. Yeah, the sales are 8 million. They are making net income. Like, look at that. They're making 2 million of net income a quarter. So that's actually, if the numbers are right there, that I can see why the stock's done pretty decent, but that one has such a low market cap. I'd be very careful. Yo, what up? Wreck-It Ralph said BFLY. What's that one? BFLY? Butterfly Network. I've not heard of that one before. They're worth $600 million. Hey, I appreciate y'all. Yo, I'm streaming on TikTok and YouTube. I'd appreciate if y'all would go over to my YouTube channel and watch the stream from there. It's in the link tree in my bio, or you can type into YouTube Nathan Robert. But devices and accessories. So they sell devices. Look at that. The revenue's up 44% year over year. What about the software? Their software revenue's up 20% year over year. So that's awesome. What about net income? So yeah, that's what you got to be careful of. They're just losing a lot of money right now. So the sales are up 35%, but they're losing like 10, 20 million a quarter. And when you're worth 600 million, that's not great. What about ServiceNow? Yeah, that's ticker symbol NOW. This is a great software name. I own Salesforce, but this one is kind of like a Salesforce competitor. Just look at their digital workflow products revenue. It's ridiculous. It's at a new record, 2.5 billion, up 22% year over year. So that's incredible growth. That's the most of their business, 85%. Yeah, they usually make $1 billion of free cash flow a quarter. Yeah, 340 million. They're very net income positive. That's very impressive. Yo, what up, Brody Blader? What's up, man? Yeah, appreciate you being here on the YouTube stream. Yeah, if you guys got any stocks you want me to look at, let me know. I'm reading both the YouTube and TikTok chat. I don't sell anything. I don't got a course, book, Discord, WhatsApp, Telegram. I don't got none of that. All I have is a YouTube channel. So if you want to support me, check out my YouTube channel. It's called Nathan Roberts in the link tree in my bio. But anyway, here's Shopify stock. This is a Canadian company, but I used to have a Shopify stock. Every time you'd sell a product, you'd have to give them a small percent of the sale. And look at their annual revenue. I mean, this is incredible. 2024, it's still growing. It's up 25% for the full year. And the free cash flow is even better. Look at this. The growth is incredible. 600 million of free cash flow just in the most recent quarter. The net income was 1.2 billion in the most recent quarter. So that's incredible growth. Oh, hey, this app is called Mumu. It's in the link tree in my bio. First link there. Yeah, I love all the analysis you can do. Grab Holdings. Yeah, dude, this is such a cool stock. This is like Uber just took a stake into this company. Actually, I'll show you that first. This stock right here, Grab, Uber is the largest shareholder. Uber owns 14% of the company. So if you own some Uber stock, you technically own a little bit of this company. They have a phenomenal balance sheet, no net debt. I think they have they have 5.6 billion of cash and only like 1 billion of debt. So they have like 4 billion of net cash. And look at the free cash flow. It's just exploded in the 3 most recent quarters. Here's what's so cool about them. They literally do exactly what Uber does, but look what markets they're in. Notice you don't see the US or Canada over here. That's because, this was a great way for Uber to get exposure to all these markets now. So anyway, I do really like this stock. They're now finally profitable. Great balance sheet. Apologies if you already looked at Nike. I have not. What up, JCass? Dude, Nike stock, I actually just sold all of it at $79. So I feel bad because I just completely sold all my shares here, but the stock is at an all-time low, and that's because the earnings were really bad. Unfortunately, Nike has lost their growth. If I show you this right here, their sales are down 10% year over year, but their net income is down 33% year over year. So if we go to their net margin right here, their margin has collapsed. They only have a 7% net margin right now, so you got to be careful with Nike because they lost their growth. Yeah, I lost 7%. I sold Nike for a 7% loss. Their footwear revenue, their shoe sales are down 12% year over year. So yeah, that one, they just sell a commodity. They just sell, t-shirts and stuff. What's your favorite stock right now? Hey, this app is called Mumu. It's in the link tree in my bio, first link there. Here's a cool feature that it has. Like you can see like Nancy Pelosi's portfolio. She's been buying some weird stuff. She just bought like Tesla, Dropbox, Roblox, Block, a lot of Block. What the heck? Anyway, what is Delic Logistics? Yo, if you give me the ticker symbol, we'll check it out for you. I'm entered these Hood for Solar, Nvidia, Palantir. Yo, those are all great picks. Yo, SoFi as well. Yo, I'll go over SoFi real quick because I own them as well. If I go over to my Webull portfolio, I do own, look at that. We got 24 shares of SoFi again. We're down 13% all time in here. This isn't financial advice. Assume everything I'm saying is wrong. I just like to show you the numbers for yourself. You can draw your own conclusion. Here's what's so cool about SoFi. They're an incredible growth company. They have their own banking charter. Look at specifically their financial services revenue. It is up 85% year over year. This is like monster growth in my opinion. And so if we go to their sales year over year, it's up 20% to a new record, and so is their net income. It's at a new record in the most recent quarter. If we zoom out, look at that. They used to lose so much net income every quarter. Well, now SoFi is making net income every quarter. So they've really turned things around. People are starting to take SoFi more serious, and I do own some of them. But again, SoFi is really volatile and risky, a little high valuation, so I wouldn't have, a huge chunk of your portfolio in these kind of companies. That's why like Supermicro, Robinhood, these are like $200-$300 positions for me because they're so risky. Oh yeah, here's a stock I just bought, by the way. I just bought a huge stake or I say huge stake, I mean 7 shares, big whoop. But hey, I bought Sprouts Farmers Market. This is a debt-free grocery store. The stock has moved like Nvidia. Someone called me crazy for buying this stock at all-time highs, but I think this is one that'll keep just slowly hitting new all-time highs. Not financial advice. Look at this. I'm down over like $1,000 on this stock right here. I recommend if you want to buy a stock, dollar cost average into them. Don't spend all your money at once, but even if you dollar cost average, make sure you're buying a high-quality company or you could still lose a lot of money. My message is too long for something. Can you? It's all good, Arthur. I appreciate you being here, bro. Someone said Powell Industries. Yeah, I just made a YouTube video for my real thoughts on this stock. Go watch the literal most recent YouTube video I made. I went over this stock right here. This is a debt-free company trading at 14 times net income. If you do an X cash PE, they're trading at 11 times net income. It's ridiculously cheap. They're making so much net income every quarter. They're a pure growth stock, in my opinion, and dividend growth stock. Look at that. They have a dividend, 0.6% yield, 9% payout ratio. I'm up 100% on them. So it's a little tough for me to buy more, but how about, what up? So LUV stock. So this is an airline right here. So Southwest Airline. I don't really love the airlines because if we go into a recession, people just will stop spending on flights, travel less. But like, look at this. If we go back to like 2020, whenever the pandemic happened, they lost so much money. Look at that, like 1 billion a quarter. But now, even still, like the numbers are just kind of choppy still. So I just don't love the airlines. I like the sales are up 1% year over year. Like you're not. Here's the real talk. You're not going to outperform the S&P 500 owning airlines. So I would just be super careful. I mean, I would just probably avoid the airlines, not financial advice. It can still do good. The stock looked like it was doing great the past couple days there. Oh, here we go. What up, Covert? Appreciate you. DKL stock. So Delic Logistics Partner LP. So look at that. The stock's done incredible. They're pretty close to an all-time high. Yeah, these LPs. Yeah, look at the dividend. You get a 10% dividend yield. So I wonder. I believe it is sustainable because they are an MLP. So the sales are a little choppy. The wholesale sales are down. The gathering sales are up 5% year over year. Storage down 20. So it's like a mixed bag here. Look at that. They are making net income every quarter. So that's the good news. They're making 30, 40 million of net income a quarter. I don't know. I would just be careful with this one. I mean, 10% dividend might be a little unsustainable. They might have to cut the dividend, but they're still making net income every quarter. Hey, what up, David? He says RGC is the GOAT. Well, let's check this one out. Region Cell buy. Yo, what the? Look at that candlestick. They just like absolutely rallied the past week here. I mean, they're worth 700 million. There must be some good news here. Like, if I look at their financials, like, yeah, I mean, this is from 2017. So here's their balance sheet right now. They have 8 million of assets and 200,000 of liability. The assets just keep declining because they're losing net income. So anyway, this is just such a small company. I'd avoid them. Congrats if you own them. Looks like they just went crazy, but I'd probably just take the profits and run there. That looks so risky. SEI. Yo, what up, Aiden? He's SEI stock. So this is Solaris Energy Infrastructure. So I've not heard of this one before. They're worth $1.5 billion. Let's see. How's their revenue doing? So not great. Let me go to the revenue right here. So no, the revenue is doing good. It's up 52% year over year. And they made net income. So that's actually good news. They did make net income. Yeah, that's real. So the most recent earnings report was actually really good. Their assets are growing. So it's like a mixed bag, they have a 2% yield. Oh, they have a 2% dividend. That's a high yield there. All right, yeah, after the stream, I'll check out the message there. Oh, here's PayPal stock. Yo, funny enough, Nancy Pelosi just bought PayPal. Let me find that. Yeah, look at that. 0.33% of Nancy Pelosi's portfolio is in PayPal stock. This is the thing, what's crazy about PayPal. They're trading at 17 times net income. That is like a commodity multiple. This is a very cheap valuation. They're trading at like where investors are pricing like they're not going to gain or lose investors any money, which is a bit weird. Look at that. The net income is down 20% year over year, but they're making pretty much $1 billion of every single quarter of net income. So, and look, they're making $1 billion a quarter, and the market cap is 69 billion. So yeah, they are trading at a cheap valuation. They just buy back a lot of their stock. Uber stock. Yeah, dude, let's check out Uber. If you go watch my second most recent YouTube video, it's a whole video just about Uber and Grab Holdings. I think you'd find it fascinating, but check this out. We can see their active users. They have 171 million monthly active users, which is great. But here's the best part. Uber is still growing. Their mobility revenue is up 25% year over year. That's incredible growth. And look at their delivery revenue. This is up 21% year over year. That's like Uber Eats. So incredible growth. If we go to that free cash flow, it's up 100% year over year, over $1 billion. This company's probably just going to make $2 billion of free cash flow a quarter from here on out. Like, it's ridiculous. And they're making net income. So sorry. Yeah, they're making net income every quarter. They're very profitable now. So I honestly, I think there is upside with Uber at right now's valuation. Not financial advice. What's Warren Buffett been buying? I actually can't see that. All we have here is Warren Buffett's top 10 holdings. If you're curious, here are his top 10 holdings. It's first Apple, American Express, Coca-Cola. He has the high yielding dividend stocks. So, yeah. Oxy, Moody's. He owns Kraft Heinz. He owns a Lunchable stock. Dude, Lunchable stock is not done too good. Anyway, I got some Grab shares. Hey, that's what's up, Riot. Yeah, Uber is the largest shareholder of Grab now. Let's see. Actually, I want to go check out the Robinhood portfolio really quick. Yeah, look at that. Market just opened 30 minutes ago. We're up 0.5% right now. Wow, look at that. Tech stocks. All my stocks are green right now. That's incredible. What about the Roth IRA? Yeah, the Roth IRA is green as well. Where's Bitcoin? Yeah, dude, look at Bitcoin right now. Guys, check your portfolio. We're going to the moon. I'm like, all right. Yeah, let's go check out some more stocks here. Airbnb. Yo, what up, Mel? Let's check it out. Airbnb. So yeah, this is the company. They own no real estate, but they collect the high margin fees every time you go to book a stay, like a night booked or whatever. The stock really hasn't done much since IPO. Look at that. It's kind of been flat. Yeah, look at that. They reported earnings. They initially rallied up, but then they sold it all off, which was kind of odd. But I think if we go into a recession, like if we actually go into a recession, people just won't book Airbnbs. But look at right now. They're making net income every quarter, like 200 to a billion a quarter, which is great. Yeah, Q3 is usually their great quarter. And then look at the free cash flow. It's even better. Usually a billion of free cash flow every quarter. So they're I like them. But I think there's like a lot of regulation around them right now. I'm not too sure. Yo, Connor says AMD stock. Yo, I own that one as well. I am down bad on my AMD position. Let me show you this. I just like being transparent. Yo, I feel like a lot of other TikTok streamers aren't transparent. Like they don't show you their losses. Bro, what is happening? There we go. Like, look at this. We're down 14% all time in this account. So I'm not an expert. Don't listen to me. But yeah, look at our AMD position at the top there. It's up 1%, but we're still down 13% on my AMD position. Yeah, our average cost is at $125. But check this out. Here's why I like the risk to reward on AMD. We can see right here their PC GPU market share. They actually have a 17% market share, which is crazy. But the best part, in my opinion, is the exposure you get to data centers. Data centers are half their business now, and the data center revenue is up 69% year over year. That's incredible growth. So, oh, look at that overnight market. Tesla gains, Nvidia gains. So yeah, the free cash flow just exploded as well. They have $1 billion of free cash flow, and they have a monster balance sheet. They actually have no net debt. AMD, I like them. You know, I'm probably biased because I own them. Emran said, analyze Google. Yeah, I got you. Yo, what is IoT? Yeah, wait, is IoT a stock? I'll check it out. Yo, what up? Nits, he says, Hood doing good too. Yeah, dude, I got Hood stock as well. They're doing great. You know, they move with crypto usually. So let me analyze Google really quickly. We've all probably heard of them, so I'll be quick. Look at this valuation. It's pretty cheap. They're trading at a cheap valuation, 21 times net income. That's, you know, incredibly low. And look at the net income. They just make 26 billion of net income a quarter. You know, if you annualize that, that's over 100 billion of net income a year. Amazing balance sheet, you know, and they have so many mini businesses inside one. You know, Google owns YouTube, they own Android, DoubleClick, they own the Google Cloud. Look at just their Google Cloud business is up 31%. They own Waymo, they have their own quantum chip. You know, again, I might be biased on Google, but I own them for a reason because this is one you don't want to trade. Just want to buy shares of this one and forget about it. And hey, I'm only up 1.6% on my shares, so not up too much on them, but let's check it out. So yeah, let's check out IoT. I've been seeing that stock. Sorry, I didn't get to it. I've not heard of this stock before. Samsara. So, how big are they? So they're a $22 billion company. Let's check it out. Going into Europe and not being, oh, what's up? Hey, subscription revenue. So wow, look at their subscription revenue. I love this because it's all reoccurring, high margin. It's up 35% year over year. So IoT subscription revenue is doing fantastic. Wow. So yeah, look at the free cash flow. It's at a new record, 50 million of free cash flow. That's incredible. And look at that. They're getting so close to making net income. They only lost 11 million in the most recent quarter. So, I like the fundamentals there. You know, I'll add this one to my watch list. What's the balance sheet? I'm kind of leveraged, not too terrible. Yo, Arthur, I cannot check my DMs right now. I'm sorry there. I can check it out after the stream though. Let's see here. Oh yeah, Robinhood stock. Yeah, check this out. I'm a Robinhood, you know, shareholder and user. So check this out. I own 5 shares of this stock. I'll be really quick with Robinhood. This is the main reason I like them. It's this incredible growth. Of the sales. The sales are up to $1 billion in the most recent quarter, and they're making net income every quarter now, when they used to lose net income every quarter. So the fundamentals align with the stock price there. I think Robinhood is so innovative, man. Like what they're doing right now. If you want to get Robinhood, second link in the link tree in my bio. That's this app right here. That's where I have my main taxable account, my Roth IRA, So yeah, if you want to download it, it's in the link tree in my bio, the second link, or you can just type it in the App Store. It's called Robinhood. Uh, let's see. Hey, what's up, Jose? Appreciate you. My portfolio was doing bad. Oh, that's not good, Brian. Yeah, here's our portfolio. The market just opened 37 minutes ago. Yeah, here are all the stocks that we own in here. This is actually my dividend only portfolio. Here's my total percent chance on every stock. Luckily, we are green on every stock in here. We're just barely green on Google. But yeah, I love dividend stocks because I collect that passive income. Yeah, here's our risk on portfolio again. We're down 14% all time in here. I'm not an expert. None of this is financial advice. And yeah, here's our Moo portfolios. Yo, yeah, we got multiple portfolios. This is my favorite app right here. Yo, Jake, I do not have a Discord. Yo, I don't sell anything. I don't got a Discord, WhatsApp, Telegram. I don't got none of that. So watch out for people impersonating me as well. This is my only account. I only have this one TikTok, and I have a YouTube channel. I'm streaming on YouTube right now as well. So if you want to replay the live stream or something, I'd really appreciate it if you watch the stream from my YouTube channel. But anyway, let's go look at some more stocks here. Yeah, if you guys got any stocks you want me to look at, let me know in the chat. So Lone Ranger said, can you analyze low? So is that Lowe's? Yeah, check this out, dude. This is a great dividend growth company that look at the dividend right here. You get a 2% yield, but the payout ratio is only a 37%. They have so much room to raise their dividend in the future. And look at the valuation. They're trading at 19 or lower, 18 times net income. Historically, that's a very fair valuation. And if we look at the net income, they're making 1 to 3 billion of net income every quarter. They paid 30% of that out in dividends. So is Roth IRA contributions tax deductible? I don't think so. No, I don't believe so. I'm up 20K out of nowhere. Yo, dang, bro, that's nice. Can you check out ATC? Yo, what up, Marco? ATEC, Alpha Tech. Yo, that is a crazy name. So they're worth $1.5 billion. The stock has not done too great. Let's see, revenue from products. Well, actually, the sales are doing great. Look at that. The revenue is up 29% year over year. So I like to, judge them by their fundamentals here. And yeah, the sales are up to a new record. What about net income? So they do lose money, but the trend is getting better. Yeah, the sales are up 28%. They're losing less net income. So let's see here. What's up? Is this Kadu on YouTube? Oh, wait, really? What's up? Hey, I really appreciate you. What's up, dude? I really appreciate you, Kadu. So I have a 401k with work. Does that limit separate from it? Yeah, I believe the 401k limit is definitely separate from the Roth IRA contribution. I think that's what you're saying there. But what's up, Ed? I appreciate you being here. Let's see, Michael. Oh, MSFT. Yeah, let's check Microsoft out, dude. This is a cloud play, hardware, software play, subscription play. Has anyone heard of that Minecraft movie? That's owned by Microsoft. They're about to release that. We can see their premium subscribers. They have 82 million premium subscribers. Yeah, look at their intelligent cloud business. This is a big winner for them. That's up 18% year over year. So their cloud business is growing double digits. That's high margin for them. So if we go to the net income right here, it's ridiculous. It's 20 to 25 billion of net income every single quarter. And they also have a growing dividend, 0.8% yield, not bad. So since the market is green for now, does that mean market will be green? I've seen this before. Like right now, the market's green, but then when the market actually opens tomorrow, we're red. So honestly, anything could happen. So I definitely don't know. So what up? John Smith said, can you look at MDA on the Texas Stock Exchange? Wait, MDA. Is that this stock right here, MDA Space? If I'll be quick, because I don't know if this is the stock you're talking about. I hope it is. $3.5 billion company. It's a Canadian stock. We'll switch it to US dollars. So satellite systems, robotics. Wow, actually, we might have just found an interesting stock. Whoa, look at their satellite revenue. It's grow 50% for the full year 2024. Robotics and space operations. Geointelligence. Are they net income positive? Yeah, they're making net income every quarter. I don't know if this is the stock you're talking about, but I'm going to add it to my watch list. It looks very interesting. The sales growth is there. They're net income positive. So, yeah, they're Canadian, so they're not, on the U.S. stock exchange, but that's really interesting. Is Render good? Are you talking about Render token, like the crypto? I don't know. I don't really own any crypto. I love dividend stocks. Like if I go to my Robinhood portfolio right here, every stock I own in here actually pays a dividend. Even though, like Meta, for example, even though I know this isn't really a dividend stock, they do pay a dividend. I'm mainly buying them for the stock price appreciation. Yeah, no problem, John. Yes, sir. So here's Bowhead Specialties. Someone said look at ticker symbol BOW. So I'm not sure what this company sells, but look at this sales growth. That's incredibly impressive. It's up 45% year over year to 120 million. So and they beat on sales and net income in the most recent quarter. So yeah, they are making net income, 14 million of net income. That's incredible. What about free cash flow? They're making free cash flow every quarter. Yo, these are some cool companies. I'll add this one to my watch list as well. They don't pay a dividend. I like that they don't pay a dividend. Yeah, that stock is pretty close to all-time highs. They deserve it, dude. They're doing great. Yeah, but I don't know, Arthur. Probably some good news over the weekend, or the stock market moves. If the dollar loses values, stocks go up because the dollars are worth less, so the market cap goes up. There's always so much different things it could be. Um, Look at Icon, yo. Please do not buy this company. I feel bad if you own this one. I lost a lot of money on this stock a long time ago. First off, they give you a K1 tax form. I didn't know that when I invested in this. So if you buy this stock, you will get this weird tax form that no other stock gives you. And it costed me $300 with an accountant to get it filled out. You don't know how upset I was. I bought this one. I was like, oh, wow, 30% dividend. Let me cash in on that. But look, their dividend just gets cut. They can't afford the dividend, actually. So if we go to their net income right here, I've made every mistake there is to make in the market. So, yeah, look at it. Look at how inconsistent this net income is. Like they had 1 quarter of net income positivity. Like, how can they afford a dividend? You can't. So, that's why the stock has absolutely collapsed as well. They're diluting you. So, is Icon Ski Resort stuff? Are you talking about? VRT? No, it's like Vail Ski Resorts. Oh, I don't know the ticker symbol. There's Vail Ski Resorts. Here we go. Can you check BROS? Yeah, Dutch Bros. Yo, Dutch Bros is this is like Starbucks competitor, and they're growing like crazy. So check this out. If we just look at their company operated shops, which is, 90% of their business, look at this. It is up 39% year over year. That's great growth, 39% growth. And look at that. They're making net income now. So for a restaurant in this environment to be growing their sales that much, I find that really impressive. They're making net income every quarter. They just started making free cash flow in their 2 most recent quarters. So yeah, looks like Dutch Bros is now going to be net income positive. Yo, Daniel said Lucid stock. So yo, this is one, in my opinion, I would avoid. I feel bad if you own this one. So if you're wondering like, hey, why is this stock at an all-time low right now? Like, what happened there? It's just because of this net income loss. They lose so much money every quarter. Literally last quarter, they lost $1 billion. The whole company's worth $7 billion. So they lost literally 1/7 of their company just last quarter. So anyway, if you just looked at the revenue, you'd be like, oh, they're growing like crazy. The sales are up 49% year over year, but they're losing so much net income. So anyway, I would stay away from Lucid. I unfortunately think that one will just slowly keep on bleeding down. There might be like a one-time like momentum spike, but I think in the long run, that's one you don't want to own. Not financial advice, that stock could still do good. So yeah, here's Vail Resorts. I don't know if you wanted me to look at that one. This is the company that owns all the ski resorts. So this company is actually getting boycotted recently. Like they had like a worker shortage, something. I don't know. The stock has not done good at all. Look at the dividend. They have a 5.5% dividend, but unfortunately, I don't think they can really afford it. Yeah, look at that mountain. How's their mountain revenue doing? Yeah, it's so like cyclical. Whenever there's the cold weather, they get 2 good quarters. But yeah, the net income's so choppy here. Look at that. They make 2 quarters of net income, lose, make, lose. So this, I would stay away from NTN, Let's see here. What is the best stock? I wish I knew that. I'm back holding Lucid, and they might have survived. Saudi money is infinite. Hey, that is true. I forgot the Saudis have a huge stake in them, right? Yo, the Saudis just bought Pokemon Go. Did y'all hear that? Saudi Aramco, or not Saudi Aramco. Anyway, let's look at some more stocks. A&F. This is Abercrombie and Fitch. Yo, this is like an apparel company. They kind of like Nike's competitor. Dang, the stock has not done too good. Look at that. They've kind of collapsed the past couple months here. Look at the PE. This is kind of like American Eagle. They trade at such low PE ratios, 7 times net income. That's ridiculously cheap. And yeah, look at this net income. It's incredible. They're making pretty much 150 million of net income on average a quarter. That's great. So, they just sell a commodity, but yeah, they could do a special dividend. They're probably doing buybacks as well. Is Bank of America a buy? Yo, what up, the 2K? Yo, that's a Warren Buffett stock. Warren Buffett approves that message. Yeah, Bank of America right here, that's 10% of his portfolio. And, you can't go wrong with the banks. Look at that. You get a nice little 2.4% yield, low payout ratio. Look, they grow their dividend every year. So now for the full year 2024, you now get $1 per share that you own. When in 2020, you only got 72 cents. So imagine what that'll be in like 10 years, either in consumer banking, global banking, a lot of markets. Yeah, look at that. They may just make 6-7 billion of net income a quarter. It's crazy. Uh, can ChargePoint survive? Yo, Dash, that is my biggest loss. Yo, this is full transparency. I'm glad you mentioned that. And yo, no other TikToker would show this, but check this out. But check this out. This is my biggest loss right here, ChargePoint. This is what makes me look at fundamentals so much. So I'll be quick with this, but I sold all my shares at 66 shares at $2.85. And a good thing I sold it all at 285. But look, I sold it all at 285. Look where I was buying this. I was buying this stock at over $15. Even over here at $22. So anyway, this was my biggest loss ever. And I used to not look at this stuff. I didn't realize this is the company I was buying. Look at this. They just lose so much net income every quarter. They just burn investors' money. And look at that. The sales are down 12%. So the sales aren't growing and they're still losing a bunch of net income. 70 million a quarter. That's nuts. For the whole company's worth 300 million. So yeah, ChargePoint, in my opinion, is getting delisted. They should just keep on slowly going lower and lower and lower. And yeah, look at that. We're down 14% all time in here. So hopefully you would appreciate the transparency. I don't sell anything. By the way, I don't got a course, book, Discord, WhatsApp, Telegram. I don't got none of that. But if you do want to support me, I have a YouTube channel. I just appreciate if you just go subscribe to my YouTube channel. It's called Nathan Roberts. It's also in the link tree in my bio. I'm also streaming on YouTube as well. So you can watch it on replay or something. Do you dollar cost average any index funds? I'm on the edge of my seat. Oh, for SoundHound AI. Yo, thank you so much, K-Dude. Let's check out SOUN, SoundHound AI. So this is a very interesting stock right here. Here is what the main thing you want to look at here. Their subscription revenue. This is what's nuts for SoundHound AI. Look at this. A year ago, they were making, nothing, 500,000 a quarter. Now in the most recent quarter, it's 30 million. That's an incredible amount of growth in a short amount of time. So at this growth rate, what's it going to be next quarter? Will it be 35 million? I don't know. But here's another thing you got to watch out for. Look at their product royalties. Their high margin royalties kind of just fell off a cliff. It's down 70%. So I don't know what happened there. And here's another thing that kind of disappointed investors. I don't know how this is possible, but they lost 250 million just in the most recent quarter. That's not good. But the sales were up double. The sales doubled 101%, but they lost a lot of money. So it's like a mixed bag on SoundHound AI. Some good, some bad. NVIDIA also just sold SoundHound AI. If we go to NVIDIA's portfolio right here, SoundHound AI used to be right here on this list, but NVIDIA sold out of SoundHound AI. They own APLD. Here's actually, I'll go over APLD really quickly. This is a huge cloud service play. Check this out. If we look at their cloud service revenue, look at it. It is up 500% year over year to 30 million. So that's incredible growth for their cloud business. But again, this is another one that loses net income right now. So I wouldn't put a lot of money into this stock. They're still losing net income. But I think these are the kind of companies like I have right here, like SoFi, Robinhood. You just want to have small, $200 positions in them, not a huge chunk of your portfolio. Just my opinion, not financial advice. You could lose a lot of money like I did on this stock right here. I'm down over $1,000 on this stock. So, oh, here we go. TTD, the trade desk. I saw the one earlier. I forgot to get to it. So this is an advertising company. And if you're wondering why did this stock just tank so much, it's because they lost Netflix. So Netflix used to use the trade desk to find their advertisers, but now Netflix dropped them and uses. That's what happened in the most recent quarter. I think this is oversold though. This can't be how much Netflix was worth to them, but they actually had a record quarter. Their revenue was at a record. Their net income was at a record, 182 million, and the net margin was a 25%. They hit a record a quarter, but they lost Netflix. So I think that's why the stock fell. I think that one is oversold. I think that one will probably recover. What's the most important thing you look at before you buy a stock? Yeah, all the financials, Jeff. I look at the net income, the balance sheet. I go over that on my YouTube videos as well. I just checked out some 3 high growth stocks. If you want to check it out, my most recent YouTube video. Yo, John Smith, I'm gonna give you a follow. Thanks so much for subscribing to my YouTube channel. I really appreciate you. Let's see. Nice SMCI hold. Yeah, dude, Super Micro, I have 10 shares in them. I've held them through a lot. I saw this company rally up to 60. I didn't sell any, so I'm just going to hold on to my Super Micro position. It's kind of like Robinhood and SoFi. Even though I'm up a huge chunk on them, I don't want to take profits. My position's so small anyway. I don't really want to take any profits on them. Um, let's see. IONQ, that's a quantum play. Actually, if I go right here to like the quantum stocks, where's the quantum play? If I wanted quantum exposure, I'd buy Google and IBM, Microsoft maybe. But then here's the thing about IONQ. I'll first go to the net income. This is the bad news. They just lost 200 million of net income in the most recent quarter. They lose a lot of money. So they're losing money, but the sales are very impressive. Look at their quarterly sales. It's up 91% year over year, but they're only 11 million. So check that out. Yeah, actually, the more I look at this, the more I kind of don't like it. So the revenue was 11 million in the most recent quarter, and they lost 200 million. Not even including this quarter, they usually just lose 40, 50 million a quarter. So I'd really like to see this company make money. The valuation, is infinite right now because they don't make money. So we can look at the price to sales, but anyway, I would probably stay away from them. If I wanted quantum exposure, Google all the way, man. Not financial advice. They have the money and the talent to be the industry leader for quantum. So that you think AMD will have a comeback? I'm holding since 150. What up, winnings? And yeah, my biggest loss so far is AMD. Yeah, dude, AMD. Luckily, they're up 1.37% in the overnight market. Yeah, let me go to the 1 minute chart here. Yeah, look at this on the 1 minute. Incredible, nice little jump. I'll go check the Robinhood portfolio after this, but I'll show you why I like AMD so much. Not financial advice, and here's why I wouldn't sell AMD, and I'm not selling them. Yeah, I like them for the advanced money destroyer. Look at their PC GPU market share, 17%. That's really good. The data center growth is incredible in my opinion. It's up 69% year over year. I mean, that's such great growth. The client revenue is up 58%, but here's some not good. Look at their embedded revenue. This is down 12% year over year. Luckily, that's only 13% of their business, but the free cash flow in the most recent quarter was over $1 billion. So, AMD, I think the risk to reward looks pretty decent on them to just hold. Amazon or Google or both. Yeah, dude, John Smith, you're right, both. And I do own both. Here's my Roth IRA, by the way. A Roth IRA is just a tax-free retirement account. I have one share of Amazon in here. Look at this. I got a bunch of shares of Build-A-Bear Workshop. Build-A-Bear Workshop, y'all won't believe it. Their stock is up 17 or 1,700% in 5 years, and I'm down 3%. So let's keep going here. Oh yeah, and Google. Yeah, here's my Google position. I got 16 shares in them. MRVO. Yo, Daniel, what's up, man? MRVO. So this is Marvel Technologies. They just gapped down on some not great earnings. So look at this net income right here. Like, actually, I didn't know they were just reported earnings. So look at that. They actually just made net income for the first time. So if we zoom out, this is what I used to look at. They just lost $600 million. But now in the most recent quarter, this is great news, actually. They just made $200 million of net income. So that's very nice. So as long as they can keep up that net income growth, I actually do like Marvel. Yeah, the free cash flow is down 5%, but still 400 million of free cash flow a quarter is not bad. What are the sales? So yeah, they just jumped up. So anyway, actually, it's not terrible there. I want to see them continue to make net income. I think CEG will just keep growing. Yo, me too. I can't wait for CEG to fully acquire Calpine Energy. It's instantly accretive $2 of yearly EPS for them, which if you do a multiple on that helps out the stock price so much. Yeah, I own 15 shares of CEG. This stock right here, if you're wondering what they are, Constellation Energy, this is a pure nuclear play. This company, out of all the nuclear energy facilities in the U.S., this company owns 55% of them. So largest pure nuclear energy play. They're worth like 80 billion. They're huge, but I do own them. Chris said CELH. Yeah, so here's Celsius right here. If you're wondering like what happened, how did this stock go from $90 to $33? You just got to look at the net income for this company because it kind of just collapsed. Because if we zoom out, look at that. They used to make 50 to 90 million of net income a quarter. But in the most recent quarter, actually, they just lost $15 million. So That's not good, obviously, but they just acquired Alani, which is good. Should bring back some sales growth because their sales are down 5% year over year. But you recommend using margin or straight cash for trading? Yeah, never. I don't use any margin. Like they give me the ability to take out margin, but I never take it. I have a margin account, but I've never used a single dollar of margin ever in my life. Uh, and that's for all of my accounts as well. I don't have margin enabled on my Robinhood account either. Yeah, look at this. Congrats if you own stocks. Look at that. We're up 0.5%. But hey, if we go to the 3 month, we're still down 6% on the 3 month, 5% year to date. But it's a good little turnaround that we're up 0.5% today. Yeah, the market's open right now. That's what's so cool about Robinhood. What are 3 stocks you like long term? To be honest with you, all these stocks in here, just because I own them, like McDonald's, for example, this one will just return you 6 to 7% a year. Anyone seen that new McDonald's movie? Wait, Minecraft, Minecraft movie, McDonald's Happy Meal. A lot of M's there. Happy Meal. Yo, what up? What's up? Telepress, what's up, dude? Yeah, if you got a stock I'm gonna look at, let me know in the chat. I got you. Yo, I'm streaming on YouTube and TikTok right now. So anyway, 3 stocks I'd recommend buying. I'll show you kind of the stocks I have been buying recently. Whenever I buy a stock, you can see the buy. I just bought the dip like crazy on APH stock. You've probably never heard of this company before. But that's what I wanted to hopefully show you. I want to show you stocks you've probably never heard of before. I don't just want to go over Google and Apple all day. Here's Comfort Systems. They repair HVAC systems. That's a business that's never going anywhere. I think their stock has done incredible. But anyway, I have been buying the dip on them. And here's a high yielding dividend stock. If you're a dividend investor, like the higher yields, this is CubeSmart right here. I've been buying the dip on them. They have a 5% dividend and it's completely sustainable. Not financial advice, And then we have this stock right here. I'm down a lot of money on this stock right here. Oh, yo, what's up, BR Baller? Let's check out Elf stock. Yeah, try not to spam. I got you, bro. Elf Beauty. So this company, it's such a mixed bag here. So this stock has collapsed recently. If you just look at the sales are up 31% to a new record. Look at this annual sales growth. I mean, it's phenomenal. For the full year 2024, it was up 76%. But here's the bad news. It's the net income. The net income is actually down 35% year over year. So what does that mean? They lost their margin. Look at their margins. It used to be 15%. Now in the most recent quarter, it's 4.8%. So that is why I think the stock has just kind of collapsed recently. I think it's the risk to reward actually now looks decent on them. What about UPS? Is that a good play for the long run? Yo, raw. UPS is not a good long-term hold. And in my opinion, this is like a dividend play. You're not going to outperform the S&P 500 owning UPS. And that's because look at this. They have a 6% dividend yield and the payout ratio is a 96%. So literally they're spending all their net income just on dividends. They're not leaving any money for, investing in the company. They just make, 1 to 2 billion of net income a quarter, and then they just pay it all out in dividends. So you're not going to outperform the market in the long run with this one. You're buying it for the high income. But you get the 6% qualified dividend. Some people are happy. Hey, 6% dividend a year. I don't care about the stock price appreciation. I'll take the 6% a year. That too. I think UPS isn't going anywhere. I mean, they're kind of being out innovated by Amazon right now. Amazon's like the new dollar store. They're doing incredible. I do own Amazon, by the way. Who knew the most valuable part of Amazon is their Amazon Web Services. This is now over 100 billion of revenue for them, up 20% year over year, incredible growth. Actually, look at this. You won't believe this. Amazon made 20 billion of net income just in the most recent quarter. If we zoom out, they used to lose money in 2022. They were losing billions. Now it's 20 billion just in the most recent quarter. So that's incredible growth in my opinion. Not financial advice. Yo, Borella says, can you do AMEX? Yo, that's a Warren Buffett stock. If you go to Warren Buffett's top 10 holdings right here, AMEX, is that not American Express? No, that's AM. Wait, let me type that one in. AMEX. So yeah, this is a different stock actually. Maybe you're talking about American Express. Let me know. I'm not too sure. If you're talking about American Express, I can check it out. Yo, Jose, the 5% dividend yield stock I was talking about was ticker symbol Cube. CubeSmart right here. They're a real estate investment trust, a REIT. You want a good monthly dividend? PRT. Let's check it out. Here's how I analyze if a dividend's sustainable. I'll kind of do the math for you here. So this is a 10% dividend yielding stock. That's nuts. They're only worth 49 million. So look at that. Yo, they don't make much. They're making $1 million of net income a quarter. So look at that. They make 1 million of net income a quarter. Let's go see how much their dividend cost. I'll be quick about this. Their dividend cost, oh, it's not showing me. This, we can't find it. That is weird. Oh well. When should we buy Tesla? Dude, Tesla stock, I honestly, y'all aren't gonna, I just like, I'll show you the numbers for yourself. You know what? You can draw your own conclusions. So check this out. Here's the thing, like their automotive business, their main business, their automotive sales are down 5% year over year. So they're not growing their automotive business anymore. But here's the hidden gem about Tesla. So that's, 90% of their business. But check out their energy business. This is the hidden gem at Tesla. You're not going to believe this. The sales are up 112% year over year. Again, the valuation of Tesla is still ridiculous. They're trading at like 112 times net income. Yeah, 121 times net income. So I personally can't pay that valuation, but it's Tesla. They always traded at crazy valuation. I'm just going to stay away from them. Honestly, here's the thing. BYD, this is like the Chinese Tesla. They make way more net income than them. Tesla's a mixed bag. It's my favorite divvy. Hey, DM Gold. The thing is, that stock just doesn't make too much money. $1 million a quarter isn't too much. I wouldn't put a lot of money into that one. I'd just be careful with that one. Not financial advice, not personalized advice. Yo, here's ticker symbol EL, Estate Lauder. This is like a beauty and healthcare company. Unfortunately, they have lost all their growth. Oh, check this out. This app is saying that there is a bullish symmetrical triangle and the rise probability is 95% chance. So, that's from a technical analysis, but let's go look at their fundamentals here. They're in these high margin industries, skincare, makeup. Let's see, how's their skincare business doing? Yeah, it's down 11% year over year. That's why the stock has collapsed. What about makeup? Down 1%. Fragrance up 0.9%. Hair care down 9%. So yeah, pretty much all their businesses are shrinking. Yeah, dang, look at that. And they even are losing money now. They just lost 600 million of net income. So that's kind of, the sales are down 6%. Honestly, this company kind of deserves this terrible stock price. They're losing money, a lot of money now. So yo, Jeff Mack, really cool to see you, dude. Thoughts on AEO? I think this one is bad, but there's hope for it. Let's check it out. Yo, thank you, Jeff Mack, for still being a member. This is American Eagle. Yo, this one trades at a ridiculously low valuation. Again, they just sell clothes, they sell commodities, so they'll always trade at this low valuation. But look at that. They're trading at 7 times net income, but look at the dividend. It's a 4% yield, a qualified yield, and the payout ratio is only at 29%. So they actually can even raise their dividend if they wanted to. So yeah, they own American Eagle. Yeah, the American Eagle business is down 6% year over year. That's not great. What about, I don't know what Aerie is. That's up. That is actually growing. But if we go to the net income right here, here's the main part. Look at that. They're making 60 million, 100 million of net income a quarter. That's why they can afford the dividends. So, it's not the worst play, Jeff Mack. Actually, here's another kind of similar stock, ANF. This one might be a safer bet. This one's also done terrible. It's all the apparel stocks. That's what sucks. Look at Nike, for example. I just sold out of Nike for a big loss. You can see where I bought it and sold it. Yeah, full transparency. Nike has lost all growth as well. So it's like the whole industry's getting wrecked. Oh, hey, Vivi, this app right here is called Moomoo. If you want to download it, it's in the link tree in my bio. It's the first link there. I love all the analysis you can do. Let's see here. Oh, look at PR. What's this one? Permian Resources. So this looks like an oil and gas stock. Yeah, they probably have a high yield. Yeah, look at that, a 5% dividend. So what's the net income? Yeah, look at that. They're just making 400 million of net income a quarter. Not bad. Someone said, how's your Robinhood portfolio doing? Yeah, we got multiple portfolios here. Check this out. The stocks are green in the overnight market. We're up 0.5%. Hey, thanks for all the follows. Yeah, if you guys want to hit the follow button, we go live every day, twice a day. We just look at stocks, and I don't sell anything. I don't got a course, book, Discord, WhatsApp, Telegram. I don't got none of that. I'm just on here giving my opinion, but I do have a YouTube channel. So if you want to just help me out, go subscribe to my YouTube channel. I'm also live streaming on YouTube as well. So if you wanted to rewatch it, you missed something, you can rewatch it there. Anyway, let's look at some more stocks here. Yeah. Should I cut losses? David said AMOD. Should I cut losses? Oh, yo, let's check out UNH, what's up, Rawl? Yeah, we'll check out UNH, then we'll look at OXLC as well. Yeah, I'll check out both of those. So yeah, this stock looks really risky. If you look in the top right, they're only worth $20 million. So yeah, that looks extremely risky. Yeah, I'd probably just take the loss on them. And yeah, I look at they have way more liabilities than they have assets. Yeah, that is. I feel bad that you own that one. I'd be so careful. So yeah, let's check out United Health Group. We use United Health Group. We use Optum RX. So I'm a customer. So yeah, look at their Optum RX business. This is incredible, incredible annual growth. Look at that. From 2020, it was 35 billion. Now, just in the most recent quarter, it's 35 billion. Can you believe that? It's up 15% year over year. That's just one business for them. Anyway, you really want to look at the operating profit here. They make pretty much 6 to 7 billion of net income a quarter. They have had some one-time adjustments. They got hacked and they had to pay a huge, literal like $7 billion fee back in the day. But anyway, United Health, you can't go wrong owning this one. Health insurance company. That's a great dividend growth stock. Oh, this one's super risky. All the apps I'm using, I'm not sure what app you're talking about. All the apps I'm using are in the link tree in my bio. Anyway, here's OXLC. This is Oxford Lane Capital. They have a 25% dividend and they pay you monthly. So that's not bad. They're worth $2 billion. So let's see. Can we check out their quarterly revenue? They don't give us the quarterly revenue. I've never seen a company do that. That looks really weird. I mean, the sales, wow, look at the sales. That's great news, obviously. They did make net income. I'd have to do some more research on that one. I mean, the stock appears to be doing all right, but I'd be so careful with that one. Actually, let me look at this on Robinhood. OXLC. XLC. So Oxford Lane Capital, it's not even supported on Robinhood. So yeah, the stock has not done too good. These higher yielding dividend stocks, the stock price will kind of lose value while paying you the dividend. Oh, yo, William, you subscribe to my YouTube channel. Yo, I'm gonna give you a follow. Thanks so much, man. Yeah, dude, if y'all don't know, this TikTok account I'm on right now has been permanently banned 3 times, where if I can't even log in. But it's also been unbanned 3 times. So I'm scared my account's gonna get it's gonna get banned again. So if you wanna help me out, just subscribe to my YouTube channel. I'm streaming on there as well. I dual stream. Yo, here we go. Affirm Holdings. That's a buy now, pay later stock. Has anyone seen on Amazon like buy now, pay later with Affirm? This stock will get smoked in a recession. People just won't pay back these loans, but the growth right now is incredible. The revenue is up 50% year over year to 800 million. That's incredible sales growth. And look, for the first time, they just made net income, 80 million of net income. That's incredible. They usually lose net income every quarter and a lot of it. But as long as they can keep up that net income positivity, I do like the future of Affirm. Should I pick up SoFi tomorrow? Yo, dude, I own SoFi stock. It's tough to buy on a green day. Let me show. Oh yeah, again, don't listen to me. I'm not an expert. We're down 14% all time in this portfolio. We have dramatically underperformed the market. So always do your own research, not financial advice. But yeah, we do own some SoFi stock. They're a fintech. I'll give you a quick analysis on them. They have their own banking charter. They're really taking market share. If we look at just their financial services revenue, the growth here is why I own them. This is incredible. It's up 85% year over year to a new record. So their financial services are doing amazing. Their lending revenue is up 18% to a new record. Technology platforms up 8%. And look at this. They're now net income positive. They're making net income every single quarter. If we zoom out to last year, they were losing net income every quarter. So people are really starting to take SoFi serious. That's what I like about them. Why are stocks up so much? I don't know. It's the weekend. There maybe have been some good news over the weekend. Yeah, check this out. If we go to my watch list right here, Nvidia's up 1%, the Qs are up 0.7, Apple's up. So yeah, congrats if you're in any tech stocks. Looks like the market's going to be green tomorrow, and not just stocks. Looks like crypto. If we go to Bitcoin right here, look at that. On the one day, they're up 1.94%. We're seeing a little bit of a retrace right now. Healthy RSI retrace probably. Yo, ticker symbol DOW. What up, Hayden? What's up, man? So this is Dow Inc. They sell like chemicals and plastics. So they just sell a commodity. So dang, the stock has really fell recently. And let me actually verify that. So yeah, packaging and specialty plastics, industrial intermediates, such a they sell niche products actually. So let me check out the dividend. So you get a, wow, 7% dividend yield. I think that might have to get cut because the payout ratio is saying 178%. That's not great, actually. The net income's a little choppy. Like actually in the most recent quarter, they lost 35 million of net income. So that's not great. So nothing, nothing's really blowing me away here to really want to own this stock. And they might be undervalued. I don't know. It's just not the kind of company I'd want to own. They're trading at 23 times net income. That actually seems a little bit expensive. ACN earnings hurt. Akinter. I cannot pronounce the name of that for some reason. Yeah, look at that. They gapped down. I wonder why. Let me go check out the earnings for you. So the orange line there is what the analysts were expecting. So yeah, it looks like they missed on EBITDA. They slightly beat on net income. So yeah, the net income was only up 6% year over year. The sales were only up 5.4%. So maybe they don't like the slowing growth. I don't know. Or maybe they gave bad guidance. Maybe that's why the stock fell. Bad guidance. Yeah, look at the valuation. We're trading at 25 times net income now. So that's a very fair valuation. Oh yeah, the Nancy Pelosi portfolio. Yeah, she's been buying some weird stocks. Look at that. She bought like Tesla, Dropbox, Roblox, Morningstar. Did y'all know Morningstar was publicly traded? She bought PayPal. So what's your favorite monthly paying dividend stock? My favorite monthly paying dividend stock would probably be this stock right here, ticker symbol O, Realty Income. They are in the S&P 500. They're worth $50 billion. And for every share that you own, if you go buy one share of this stock right now, you get paid 26 cents every month. And it is sustainable. I've done multiple YouTube videos about this stock if you're curious. I do not own them right now. I own a different real estate investment trust. I own CubeSmart. It has a lower dividend, but I think it'll appreciate in stock price more. BA, please. Dracula, what's up, dude? So I don't like Boeing, but they did just get a contract from the government. They just got a huge $6 billion contract with the government, which is good news. But if we just set that aside, the numbers are terrible. They actually haven't made a single dollar of net income in over 2 years. So think about that. They haven't made a single dollar of net income in over 2 years. Just the two most recent quarters, they lost $3 billion, $6 billion, $2 billion. What about free cash flow? Look at that. They lost $4 billion of free cash flow like every quarter. So Boeing, I'd stay away from that one personally. They have more liabilities than they have assets. That's just going to take forever to pay off all the debt. And they don't pay a dividend anymore. Look at them since 2019. The airline, you got the BA whistleblower. There's just so much negative sentiment around that stock. Maybe they're undervalued though. I don't know. Coney, that's a covered call ETF. That they literally just sell covered calls on Coinbase. I wouldn't buy this one. This stock, if you look at the top middle, it has a 203% dividend. That's just something I'm not even going to believe. They have a 203% dividend. That is not sustainable. I would just stay away from that one. You'd buy that to maximize your income. She likes stocks that have block in her name. Yeah, you're right, Jeff Max. She owns XYZ as well. Grab has potential. Yeah, this stock right here, this is Grab Holdings right here. This stock was just bought by Uber. So if we go to the largest shareholders of of Grab Holdings, Uber is the largest shareholder. They own 13%. Look, Toyota owns 5.5%. So pretty interesting. So look at the free cash flow. It was $209 million in the most recent quarter. And 14% of that free cash flow technically goes to Uber stock, which is pretty cool. And here's what's so interesting about them. This is why Uber buying them was so smart. Look at all the markets they're in. Notice you don't see the US or Canada on here. That's where, they're most popular. They're in all these other countries. So it was genius for Uber to pick up that stock. So they literally do what Uber does, but in other countries. You don't think it was investing into the fighter jet? I hope BA is fine, but they literally, Boeing has not made a single dollar of net income in over 2 years. What app should I use? Hey, I like this app right here. It's called Mumu. If you want to download it, it's in the link tree in my bio. I love all the analysis you can do. It's where I keep my idle cash. Like if you look in the middle of my screen right here, I have $950 of cash. Nice little interest there. Let's see, Tesla, MSTY. Yeah, MSTY is another covered call ETF. We'll look at Tesla really quick. Tesla's a mixed bag. So the valuation is obviously ridiculous. It's 121 PE. Like we can see their total vehicles delivered, deliveries by model. But here's the part that's really impressive that no one talks about. Look at their energy and storage business revenue. Year over year, it's up 112%. That's some incredible growth. Like, that's what's kind of cool about Tesla. There's a bunch of mini businesses inside one. Like, soon in the future, I guess they'll have the like robot revenue, or I don't know. But the the valuation's too high on Tesla for me to buy them, is the truth. And because if we look at their automotive business, their main source of revenue, their automotive revenue, is actually down 5% year over year. So that's not great around Tesla. Next gen, yo, what's that stock? Oh, Oscar, yeah, what up, PATO? What's up, man? So here's Oscar Health. This is like a health insurance, life insurance company. The most impressive part is the sales. Look at that. In 2019, the sales were 500 million. Well, now for the full year 2024, the sales were literally 9 billion. That's incredible growth in a short amount of time. They're really taking market share. But here's why I think, if we zoom out on the stock, they've really kind of been flat for over 2 years. That's because they're not consistently making net income yet. They lost 150 million of net income in the most recent quarter. So I'd like to see this company just stay consistently profitable, but that sales growth, man, is it impressive. Walmart, yo, Walmart. Yeah, dude, these grocery stores are doing incredible. Look at Walmart stock, for example. They are, well, I guess except for the past month here, because all stocks are down the past month, but Walmart's doing incredible. I actually own their competitor. If I go back here to my Webull portfolio, look at that. I got 7 shares of Sprouts Farmers Market. Has anyone heard of Sprouts Farmers Market? It's like a healthier grocery store. I think, Sprouts Farmers Market, they're only worth $14 billion. I think it's easier for them to double than for Walmart to double. Walmart is worth 690 billion. So they own Sam's Club. Walmart has so many good assets. They own Sam's Club. It's kind of like the Costco copy. The great business model. Yeah, no problem, Cat Son. He said ZIM stock. Yo, this company is a shipping company. They send like cargo containers. This company has a rule where whenever they make net income, 50% of that net income will be given to you as a dividend. So they made 500 million this quarter. They paid out 250 million of that in dividends. But, sometimes they don't make money. Like that quarter, these quarters when they lost money, you just don't get a dividend those quarters. So, and look at 2021, when there was all those supply chain issues, it really helped out this stock, and they were making so much money. So if you look at the dividend that year, you got $27 in dividends that year. The stock price is right now $17, and they returned you $27 that year. So I guess if we get another 2021 like scenario, crazy logistics issues, you could get a huge dividend from them. But that's not one I would own. You can draw your own opinion on that one. What do you think about YUP? Is that a stock? I'm typing in yup. That'd be a cool ticker symbol, but I'm not finding that one. I apologize there. Yo, Tempest AI. Yo, this stock right here, Tempest AI, was bought by Nancy Pelosi's husband. So Nancy Pelosi's husband bought the stock, and pretty much on that news, the stock rallied up to $90, and now it's at 51. So this is such a niche company. They're in the genomics industry, and look at their genomics revenue. It's up 31% to a new record. So that's really impressive. And also look at their data and services revenue. This is the real winner. It's up 44% year over year to a new record. So that's some incredible growth on Tempest AI. But one thing you got to be careful of, they're still losing money every quarter. This is a money losing company. But check this out. In the most recent quarter, they only lost 13 million. Normally they lose way more than that. So they just lost the least amount of net income ever. So the earnings have been good there. Yo, what up? VWAX says it was ZG stock. Zillow, yo, did y'all know Zillow was publicly traded? Y'all know like that house estimate, whatever. Zillow was publicly traded. That's pretty cool. Let's check out their, they're losing net income. Check that out. So that sucks. So the sales are up 16% year over year, but the net income losses are not good. Yeah, they just lose net income. Yeah, look at that. They used to make net income. Yeah, to be honest with you, I'd probably avoid Zillow just because they're losing money right now. I'd like a Rocket Mortgage, Rocket Mortgage just bought Redfin. Yeah, hey, Connor, this app I'm using right now is free. It's called Moomoo. If you want to download it, it's in the link tree in my bio. It's the first link there. Or you can just type it in the App Store. It's called Moomoo. Let's see. PI Coin. I don't know what that is. What up, Suave Mart? How's it going, homie? Yeah, I'm not sure what that is. What do you think of Yum Brands? Yo, I have a really cool story to tell you about Yum Brands. So You've probably never heard of this stock called Yum Brands, but you've definitely heard of what they own. They own Kentucky Fried Chicken, they own Taco Bell, and Pizza Hut. So let's see how Taco Bell's doing, for example. Taco Bell, look at that. They're up 13% year over year. You know, for a restaurant, that's pretty impressive. And here's what's really cool about this stock. They used to be owned by Pepsi. Pepsi, the other stock, Pepsi used to own all three of these restaurants. Then they spun it off. And now all these restaurants have a lifetime contract with Pepsi where they only serve Pepsi products. That's why you see the Baja Blast, the Mountain Dews and stuff at Taco Bell, because that's owned by Pepsi. Anyway, I'm getting way too much into details now. No one probably asked for any of that information, but they're a cool story. Uh, oh, I like that stock though. They're kind of like McDonald's competitor, you know. The stock was at all-time highs, and so is McDonald's, dude. I own McDonald's personally. McDonald's and KFC, they're all really real estate companies. They like McDonald's, they own the land under every McDonald's, so all the tenant or all their franchises are tenants as well, and they pay high margin royalties, sales fees. So anyway, I own some McDonald's is my second largest holding actually. I got 3,900 in them. And again, none of this is financial advice. You know, we're just look at that. The stock market is open right now. We're up 1% on the day. Yeah, dude, I expect the market to be really green tomorrow. Check that out. The SPY, QQQ's up, Apple, Tesla, and even Bitcoin. You know, Bitcoin, look at that. They're up 85K. All right, let's see. Let's get some more stocks here. Jack says, I really, really like CTAS for next week. Well, I'll check it out for you. Cintas stock. Wow, look at that. The stock is pretty much at an all-time high. You know, they've barely fallen the past couple weeks here. That's really impressive. So uniform rental and facilities. So that's up 7% year over year. First aid and safety, that's up 12% year over year. So that seems like a niche company. Yeah, look at the net income. Wow. They're making like 500 million of net income a quarter now. That's really impressive. Sales are up 7%. So their margin's expanding. Yeah, look at their net margin. Last year it was 15. Now it's 17 and a half. So that's really impressive, Cintas Group. Yeeson, EOG Resources, yo, that's an oil stock. Yeah, this is my favorite oil and gas stock, by the way. If you're looking for exposure to oil and gas, natural gas, EOG is my favorite way to get exposure. You know, not financial advice. You get a 3% dividend. They just move with oil. So you could buy Chevron or EOG. I think those are two great oil stocks. Let's see here. Dude, Palantir. I haven't looked at Palantir today. I haven't heard that one. Not a lot of people are liking Palantir, I guess, recently. I used to hear that stock all the time. What's really cool is Palantir has no debt at all. Palantir is a debt-free company, and the government's their best friend. Look at this. The government is most of their revenue now. It's up 41% year over year. So many police stations use Palantir. It's crazy. And same with the commercial revenue. It's also at a new record, up 31% year over year. So Palantir is growing like a maniac. And also, they have a phenomenal balance sheet with no debt at all. Palantir is a debt-free company with 5.3 billion of cash. Ridiculous. Oh, hey, this app right here, user is called Mumu. If you want to download it, it's in the link tree in my bio. It's the first link there. Yeah, I love all the analysis you can do on here. Oh, yeah, and if you look in the middle of my screen right there, it's where I like to park my my cashola because of the yield. Let's see. NVIDIA, yo, there's NVIDIA. Yeah, dude. We haven't looked at NVIDIA yet today either. So check this out. Here's what I really like about NVIDIA. I'll be really quick about this one because we've all heard of them, but look at their PC GPU market share. NVIDIA has an 18% GPU market share. Their automotive revenue is also at a new record because they're partnering with like Cadillac and GM. But the best part about NVIDIA is the net income. They made $22 billion of net income just in the most recent quarter. You know, until that growth goes away, I mean, I would not be selling NVIDIA. They're still growing. So, I think given the guidance, I think this one will probably get closer back to an all-time high. Not financial advice. Again, you could look at this stock right here. We're down so much money on this company right here. So I recommend dollar cost average, and do a high quality asset. Let's see. Yeah, I don't like the Yield Max ETF. You buy them if you just want to maximize income. Check out TLX. What's this one? Telix Pharmaceuticals. So yeah, I don't love these pharmaceutical ones. Let's see. Do they have any revenue? So they do. Look at that. For the full year. Wait, why is it broken up like that? So for the full year 2024, they had 780 million of sales and they made 50 million of net income. Their assets are growing. So actually Precision, it's like a mixed bag here. I can't view all their financials. Oh, so this is not, look, this is in Australia. That's why. this is an Australian company. I wouldn't buy them because I have to pay foreign taxes and stuff, but um, yeah, that's an Australian one. Can you check out what's the ticker symbol for that one, TI? What's Propnex? I've not heard of that one. TMUS, that's T-Mobile, dude. Did y'all see the Super Bowl ad for T-Mobile? They partnered with Starlink, and literally after the Super Bowl, that was this day right here, they jumped up like crazy. So anyway, T-Mobile is way better than AT&T and Verizon. Incredible net income growth here. Their net income is up 50% year over year to $3 billion, and they now pay a dividend. You get a 1% yield, growing dividend, only a 30% payout ratio. So I really like T-Mobile, and they deserve all the hype. The growth is phenomenal there. What do you think about Boeing, dude? I don't like Boeing. Or simply put, Boeing hasn't made a single dollar of net income in over 2 years. Actually, I think they've lost in the past 2 years, or just past year, they've lost $10 billion of net income. They have more debt than assets, so I'd just be careful with that one. How's Coca-Cola? That's Warren Buffett's one of his top holdings. We'll go to Warren Buffett's top holdings here. Yeah, 9.7% of his portfolio is in Coca-Cola. Look at that. They're pretty close to an all-time high. This is a great dividend growth company. You get a 3% dividend. The stock price is done pretty good. And if we go to the net income, they just make usually 2 to 3 billion of net income every quarter. They have a huge partnership with McDonald's. That McDonald's Sprite. The Sprite's owned by Coca-Cola. So is High C. Actually, all the drinks you see at McDonald's are Coca-Cola only. Redfin just got bought out, so I can't really look at the fundamentals here. So Rocket Mortgage just bought Redfin. So genius acquisition, by the way. DLR. This is a real estate investment trust. This is Digital Realty Trust. They own a bunch of data centers, or technically they own the land under a bunch of data centers, and they have a sustainable 3% dividend. So that's a nice little dividend yielding stock. For this one, you want to look at the cash from operating activities. If it's up 66% year over year, wow, that's actually some really good growth. So it's a cool digital a data center REIT. Can you check out? Oh wait, I'm sticking with VZ to the end for the dividend. Yeah, dude, Verizon, you get that qualified 6% dividend. So anyway, here's QSR, Restaurant Brands International. It's a Canadian company. What do they own? So they own Tim Horton, Burger King. Whoa. And they own Popeyes as well. Dude, let's see how Burger King's doing. Dang, look at that. This is a huge change from McDonald's. That's actually kind of sad. Burger King is not doing good. What about Popeyes? Popeyes is up 10%. How about Annulo? Wow, look at that. This is really impressive for a restaurant. When they dropped that Popeyes chicken sandwich in 2021, it was crazy. So, they own Firehouse Subs as well. And Tim Hortons. Tim Hortons is most of their revenue. How's that doing? That's up 0.8%. Not great. So yeah, it's like a mixed bag there. BIDU. That's one of the Chinese tariff tech plays. Let me go find that. So yeah, my favorite Chinese stocks are Tencent and Alibaba. Those are the best two in my opinion. Tencent owns 50% of Fortnite, by the way. So this stock right here owns 50% of Fortnite. But anyway, yeah, let's go to Baidu right here. Ticker symbol BIDU. This stock actually hasn't done too good on the weekly, but I'll give you an analysis on them. Look at their active users. It's actually down 4% from the previous quarter, but 680 million monthly active users. That's really crazy. And look at the net income. This is why I probably wouldn't sell this one if I owned them. Look at that. They're making 800 million to $1 billion of net income a quarter. So, and the valuation was low as well. Yeah, look at that. They're trading at 10 times net income. So that's a very low valuation. Oh, they own PUBG as well. Tencent owns PUBG. I did not know that. Thank you. We can look at another video game stock, TTWO. This is Take-Two. They own Rockstar Games. So this company owns Red Dead Redemption. They own GTA 5. And hey, GTA 6 is about to come out. How do I know that? Or it's coming out this year? Because they announced it on this earnings call. They said the game GTA 6 is for sure coming out in 2025. So that's supposed to be a huge revenue driver in the future for them. Is Lucid, please? Dude, I feel bad if you own Lucid. This is not a stock I would recommend. The stock is at an all-time low. They're diluting the shareholder when the stock is at all-time lows, and they lose so much money. you know, just last quarter they lost $1 billion pretty much, 400 million this quarter. So I would like to see Lucid finally start to make profits. You remember how they lost just last quarter they lost $1 billion? Well, the whole company is worth 7.3 billion, so they lost 1/7 of the market cap of the whole company in 3 months. So I'd be really careful there. Oh, yo, Hasbro, ticker symbol HAS. Yo, this is Hasbro Gaming. They collect a lot of like licensing fees. This stock owns Monopoly. Just headbands. I don't know. They own Monopoly. Let's see. What is it? Wizards of the Coast. I'm not sure what that is, but let me go to their net income right here. So, yikes, it is a little choppy. Actually, it improved like crazy since the previous year. Look at that. They made 200 million last quarter, 140 million. So actually, they've really turned things around here on their net income. That is impressive. The sales, but the revenue's down 15%. The net income's gone up though. So they're improving their margins while the sales are going down. I know they pay a dividend, right? Yeah, you get a 5% dividend. So Wizards is Dungeons and Dragons and Magic the Gathering. Oh, that makes sense. So wait, let's see how that's doing. So that's 40% of the business. And look at that. That's actually grown nicely since 2020. Let's see. It is down 8% year over year, but it's 400 million of revenue. What about corporate and other or consumer products? They just sell commodities kind of, but yeah, the stock has really just been flat on the 5 year. I guess if you add the qualified dividend to that. Yeah, I didn't know Wizards of the Coast was that revenue. Yeah, it's a niche company. That's a really interesting stock, actually. Let's see here. Anthony Cook says, oh, wait, I want to look at OYY. Yeah, what's up? Let me look at OYY. Wait, Proponex. Yo, the stock, this is not a American stock. Let me see what flag this is. Is it bad I don't know what country that is? SGD. That is bad I don't know that. But anyway, let's see. The stock's at an all-time high for a reason. Look at that. Congrats if you own them because you're definitely up on your money. So a Singaporean. Oh, they're from Singapore. That makes sense. So yeah, I wonder why the stock has done so good. Agency services, project marketing, administrative support. So yeah, they're not American, but they're cool. Oh yeah, so SMCI Super Microcomputer, yo, that's a stock I do own in my Weeble portfolio. Again, we're down 14% all time in here. Don't listen to me, not financial advice, but I do own 10 shares of this stock. I love the growth of their net income, and they're trading at a low valuation, 18 times net income, So pretty fair valuation, especially compared to the S&P 500. They make 300, 400 million of net income a quarter. Pretty good balance sheet as well. So, why do you use Moomoo? Yeah, I love this app right here for all the analysis you can do. Like, for example, and if you look in the middle of my screen right here, if you want to download this app, by the way, it's in the link tree in my bio. It's the first link. It's called Moomoo. It's where I like to keep my idle cash, but I love all the analysis features. Like if you type in Apple, the biggest stock in the world, let's go look at all the data it shows us. Like we can see the analyst rating, the Morningstar research, the PE historically. Apple's trading at 35 times PE. Look at the smartphone market share. Apple has a 23% smartphone market share. We can see where the revenue comes from. We can see most of Apple's revenue is from their iPhone. Then they have their services revenue. Yo, the services revenue is crazy for Apple. Whenever you buy something through the App Store, Apple takes a 30% fee on it, high margin for them. We can see their wearables, their Mac, iPad, and look at the markets that they're in. Did you know only 36% of Apple's revenue comes from the US? I thought it would probably at least be half, but no. Then 25% is Europe, 17% China. So this is an internationally, diverse stock. And they just make an incredible amount of money. So yeah, a lot of people saying if the dollar goes down right now, whenever they collect euros, they can convert that for more dollars than before. Anyway, yeah, if you want to download this app, it's in the link tree in my bio. It's the first link. It's free to download. Let's see, NDLS, Noodles and Co. So yo, this whole company is worth 50 million. This is an extremely small stock. I would probably avoid this one. This company bought Redbox. Has anyone heard of Redbox before? They own Redbox. Dang, they lose money every quarter. Yikes. So they're losing like 10 million a quarter. They're so highly leveraged. They have just as much liabilities as assets. So this is just not the kind of company I'd want to own. They just don't make any money. They've lost 1/5 of their market cap, and Just the most recent quarter. What's the difference is Moomoo and Weeble? Yeah, hey, if you go to the link tree in my bio, I have a video where I compare all three of these apps right here. I use all these apps. I have a portfolio with Robinhood, I have a portfolio with Weeble and Moomoo. Oops. And this is my favorite app right here. So I have a video where I compare all three of them if you want to check it out. All like honestly, Robinhood's the best for like options and stuff. And we can see the overnight market. I have I have my Roth IRA with Robinhood. They're the best for IRAs. Anyway, if you want to download any of these apps, they're in the link tree in my bio, first link there. And actually, Weeble, yeah, Weeble looks similar to Moomoo because Weeble owns Moomoo. All right, let's see here. What do you think about Canada Goose? Is that a stock? What's the ticker symbol? FYBR. So Fiber Communications. So this company's getting bought out. So if you're wondering, like, why does this stock look so weird? It's because they're actually getting bought out by another company. So you don't buy that stock because they're getting acquired by someone else. Restaurant went bankrupt in my area, Noodles and Co. Oh, really? Is Noodles? I didn't know they're a restaurant. That company bought Redbox, which was so weird. I don't know why they do that. Can you show your portfolio? Yeah, I'm completely transparent on here. What portfolio do you want to see? Ask me any questions. I've made every mistake there is. We're down 14% all time in here. So I'm definitely not an expert. None of this is financial advice. AMD, finally, they're up 1.2% in the overnight market. Thank goodness, because we're down like 15% on AMD. GOOS. We got to look at RVYL first. Let's check that out. Let's see, RYVL. So yeah, if you look in the top right, they're only worth 9.7 million. So that's an extremely small company. I would just avoid this stock. Oh, thank you, TikTok. I'm not AFK. All right, there we go. We're back. So yeah, nothing's really blowing me away here. The sales are down 27%. They lose net income every quarter. Their market cap's extremely tiny. Please don't buy that one. How do you know not financial advice? Let's see. What's your thoughts on Lucid? Yeah, don't buy Lucid. Would you invest in ETF if you had 50K? Absolutely, man. I would buy like a VOO. This is the S&P 500 right here. You should just get 7 to 8% of your money back every year with the S&P 500. And Mr. D, thank you so much for the rose, dude. I really appreciate you, homie. That's the first rose tonight. I really appreciate that, my friend. But yeah, look at the S&P 500. It just diversifies your money up for you into Apple, Nvidia, Microsoft, Amazon, Meta, Google, all these great companies. So yeah, VOO, QQQM is a great one. All these apps I'm using are in the link tree in my bio. This one's called Moomoo, the first link there. So many useful features. You can see like Nancy Pelosi's portfolio. You get the nice yield on cash. Let's see here. Coca-Cola Consolidated. Yeah, that ticker symbol is COKE. Yeah, look at this. This is the bottling company for Coca-Cola. And look at that. The stock is at an all-time high right now. It's done incredible. What about the net income? So yeah, look at that. The net income's up 100% year over year to 180 million of net income. So yeah, that's really nice actually. What is this? TradeStation? I'm not sure what that is. I've never used that. SoundHound AI thoughts. It's a mixed bag on SoundHound AI. There's a lot of good news and a lot of bad news for SoundHound AI. So I'll show you the good news first. Look at this subscription revenue. I mean, this is incredible. It jumped up from literally 500,000 last year to 30 million in the most recent quarter. So at this growth rate, what's it going to be next quarter? Will it be 30 million, 40 million, because it's a subscription revenue, it's like reoccurring. But here's the bad news. Their product royalties are down 73% year over year. And remember this number right here. This whole company is worth 4 billion in the most recent quarter. Well, this is the bad news. They lost 258 million of net income just in the most recent quarter. So they're losing a lot of money right now. So it's kind of, the subscription revenue is great. They're losing a lot of money though. I'd just like to see them get back to net income positive. Is the fee good compared to other apps? This app is free. Yeah, you can. Yeah, it is. If you go to my YouTube channel, I compare all the fees and stuff like that. Robinhood and Moomoo are my favorite apps. And that's why I use them. Anyway, let's look at some more stuff. QS, QuantumScape. Wait, really? Let's check this stock out right here. So this company, if you're wondering why is this stock at an all-time low, you might be wondering. I'll check this out right here. This is why I think they are losing over 100 million of net income every quarter. That's just not the kind of company I'd want to own. Oh, and this company doesn't sell anything. They're a startup. I forgot. So look, we go to their revenue right here. They don't sell anything. They don't sell a product or a service or none of that. And they also lose 100 million of net income a quarter. So anyway, I would just be super careful with QuantumScape. They literally just don't sell anything right now. But whenever they finally start selling something, I'm sure the stock price will go up. But I'm not sure about that. But I mean, I don't know. That one looks so risky. Thoughts on ANET? What up, William? Let's check it out. Arista Network. So yeah, this one has not done too good the past couple of days here. I wonder what happened. Did they report earnings? So they sell products. Let's see. How is their product revenue doing? Wow, that's done great. Look at that. It's up 23% year over year. That's a great growth. How about their services? And wow, that's even better. Their services revenue is up 41% year over year. So that's some really impressive growth, actually. Look at the net income. They're making 600 to 800 million of net income a quarter. That's great, dude. So congrats if you own them, dude. I wouldn't sell them. What stocks are you watching under $5 a share? Whenever you're like, you can buy fractional shares. Like, it doesn't matter the stock price. Like, you could buy $5 worth of Disney if you wanted to. So the stock price doesn't really matter. I don't think I own any stocks that are under $5 a share. Like Perio Network, this one's worth $8. But again, the share price is irrelevant because it's all market cap. You can buy fractional shares. Let's see. Thoughts on SoFi? Yo, I own some SoFi stock. That's an extremely risky company. So you don't want to have a lot of your portfolio in these kind of companies. But I do own 24 shares of them. And I'll show you why I like them so much. I'll be really quick about this. They're a fintech. They have their own banking charter, which is really cool. But here's the best part is their financial services revenue. Check this out. It is up to a new record, 85% year over year. That's the incredible part. The financial services, same with their lending revenue. Lending revenue is up 19% year over year. Incredible. And here's the best part. People are starting to take them more serious because they're making net income now. If we zoom out, they used to lose net income every quarter. Now they just made 300 million this quarter. So people are starting to really take them serious. Show us some of the Robinhood portfolio. Yeah. If you go to my YouTube channel, I do multiple stock portfolio updates. You can see every stock that I own in there. Here's my Roth IRA. Like, I show you all my dividend income. Yeah, I just like being completely transparent. And again, I don't sell anything. I don't got a course, book, Discord, WhatsApp, Telegram. I don't got none of that stuff. I'm not an expert. We're down 14% all the time in here. But if you do want to support me, the main way you can support me is just by subscribing to my YouTube channel. You can also watch the stream on replay. I'm streaming on YouTube and TikTok right now. So that would mean so much if you just hit the subscribe button to my YouTube channel and watch it from there. Anyway, let's look at some more stocks here. Should I cut my losses on Neo? Yeah. So, I probably would. They're a Chinese company. If we just look at the net income right here, this is what sucks about them. They just burn so much money. Literally in the most recent quarter, look at that. They just lost $1 billion. It's getting worse. They're losing more and more net income. So that's really unfortunate. So yeah. They lost $1 billion just this quarter, and the whole company is worth $9.4 billion. So they lost over 10% of the company just in 3 months. Yo, PokeTax. I didn't even see that. I'm so sorry. Thank you so much for the gift to Let Them Cook. Yo, thank you so much for the gift there, PokeTax. I really appreciate you, my friend. Yeah, no problem. A Insurance. What's up, man? VEU. What is that stock? VEU. Vanguard All World ETF. So yeah, this is a good ETF to get international exposure. If you go to their top holdings, yeah, look at that. Their top holding is Taiwan Semi, then Tencent. I love Tencent, SAP, Alibaba, Novo Nordisk. That's the company that owns Ozempic, Nestle, ASML. Actually, I'm going to add this ETF to my watch list. Yeah, that's a great international one. And I think they sort it by market cap. Someone said First Solar, FSLR. So this is a company that sells solar panels. And I kind of own their competitor, but this one's better than the stock I own because look at the net income they make. It's incredible. They're making 200 to 400 million of net income every single quarter. And here's the solar stock I own, and I'm only up 2% on them. I own In-Phase Energy. This stock has collapsed, but I thought the risk to reward is pretty decent. I don't want to put a lot of money into that one. I sold the stock. If you notice there, I sold it at 194. I used to own this stock. I sold it all at 194. And here I am buying it back at $60. Anyway, I've been trading these solar stocks for a long time. Oh, yo, Tio, no way, dude. Thanks for the 2 roses, dude. I really appreciate you. So Meta is bouncing right now. Let's check it out. Yeah, so I do own some Meta stock. Yo, we got a dividend. Look at that. Actually, every stock I own in this portfolio right here pays a dividend, but most of these are dividend growth stocks. Like I'm not buying Meta for the dividend. I'm mainly buying them for the stock price appreciation. Like I'm up 21% on my shares. So that's what's cool. Yo, I'm actually about to end the stream here. I really appreciate y'all being here. If you want to rewatch the stream, it's on YouTube right now. We're live on YouTube and TikTok right now. So you can rewatch the stream there if you missed anything. Let's check out a few more stocks here. Yeah, if you want to download this app right here, it's called Moo. It's in the link tree in my bio. It's the first link there. I love all the analysis you can do. It's where I keep my idle cash. Like if you look in the middle of my screen right here, it's a free app. Hey, yeah, thanks for being here, David. Good to see you. John says VEE. What is that one? Vanguard? Oh, it's another Vanguard ETF. So I just like looking at the ETF's top holdings. Oh, it's not showing us that. So it's another emerging market ETF. That's cool. How about ALLY? So this is Ally Financial. Ally Financial usually gives the best high yield savings account rate, I've noticed. And I like this company for the dividend. Look at that. You get a 3.3% dividend yield, and it's only a 66% payout ratio. Very fair payout ratio. Yeah, Moo is only for the US and Canada. So you can only get this app if you're in the US and Canada. I apologize about that. Yeah, the revenues, yeah, this is probably why the stock is flat. Because if you go to the weekly stock, it's kind of been flat since 2021. Because the revenue is only up 0.2%, and they just lost net income in the most recent quarter. I wonder what happened. Why did they lose net income? I'm not sure. But anyway, oh wait, look at that. Berkshire Hathaway. I didn't know that. Warren Buffett is the largest shareholder of Ally Financial. I did not know that. That's actually really interesting. One more PBR. Yeah, we'll check out PBR. Wait, Petroli. So this is a South American company. So let's see. Looks like they're in the oil and gas industry. They have a 20% dividend yield. That sounds crazy. Refining and transportation. Yeah, so look at that. The revenue's kind of down to 9% year over year. Yeah, hey, Ahmed, this app I'm using is called Moo. It's in the link tree in my bio. It's the first link there if you want to get it. Yeah, so look at that. The revenue's down 23%, and they even lost net income in the most recent quarter. So to be honest with you, I'd be careful with this stock, but the stock's done incredible. Look at that since 2019. That might even be doing better than Chevron. I don't know. They have a nice dividend as well. Gee, so yeah, it's actually not bad there. What? IBO. What's this one? Impact Biomedical. Yo, this one looks so risky. They're up 138%. There must be some news I'm missing. Oh, yeah, it doesn't take much to move this company. Yo, Piper, I didn't even see that. I'm so sorry. Thanks so much for the rose there, Piper. But this whole company is only worth 57 million. That's an extremely small company. And before today, they're up 138%. Before today, they were only worth 25 million. So I wonder what changed. There must have been some good news. I apologize. I can't really give you any good analysis on them. Oh yeah, and then Tempest AI. Oh yeah, well look at Coney. I got you. We'll check out CONY. But here's Tempest AI. This stock was bought by Nancy Pelosi's husband. So check that out. On that day, the stock went up to 50, and then it rallied up to 90, but it's back to 50 today. Look at this. They're a niche company. They're in the genomics business, and look at their genomics revenue. It's up 31% to a new record, so that's really impressive. Data and services is the real winner here, though. That's up 45% year over year, so very nice growth on Tempest AI. And if you go to the net income right here, they are still losing money. They're losing net income every quarter. But if you notice, in the most recent quarter, they only lost 13 million when they used to lose a lot more than that. So if you like nuclear stocks, you will like uranium as well. Oh yeah, dude, is that URMN? URNM maybe? Yeah, so this is the spot uranium miners ETF. Let's see. Yeah, so they own Chemical. This is the best. This single stock right here, I trust the most with uranium. Incredible company, CCO. I don't know about all the other ones, but it could be a good ETF to own. You're right. My exposure to the nuclear, I own CEG right here. This is Constellation Energy. They own 50% of all the U.S. nuclear energy facilities. So this is the largest pure play for nuclear energy. And I own them. I might be biased, but I'm up 9% on them. Nothing crazy. So yeah, let me show you CONY. This is a covered call ETF. You only buy this stock for the dividend. You're going to lose stock price appreciation You like it's inevitable just because of their covered call strategy. They return your own money to you. So look at them in 1 year. The stock is down 70% in 1 year. But you get the high dividend. So again, I would not buy that one because you got to look at the total return. But you buy that to maximize your dividend income. I I recommend I would just sell calls myself. That ETF does is sell calls on Bitcoin. Just sell calls on Bitcoin yourself or IBIT. Then you pay crazy fees and expense ratios, and I would just avoid that one. Amazon all the way. Yo, I actually just bought for the first time ever. One in my Roth IRA, I bought one share of Amazon. So I'm an Amazon shareholder now. And I don't own much. Look at my Roth IRA, dude. I own Build-A-Bear Workshop stock in here. So risky. I'm down 3% on them. If you guys want to see my entire stock portfolio, check out my YouTube channel. I make YouTube videos all the time on there. I do a whole entire stock portfolio update. Yeah, here's my total percent change on every stock. We are up on the day, but if you go to the year to date, we're down 5% year to date. And again, none of this is financial advice. Don't listen to me. We're down in this portfolio as well. Like, look, top left, we're down 14% all time in here. So hopefully you appreciate the transparency. If you want to hit the follow button, I really appreciate that. I see all these other TikTok people. I watch the other live streamers. They don't show their losses. It's so weird. And I don't sell anything. I don't got a course, book, Discord, WhatsApp, Telegram. I don't got none of that. I'm actually going to end the stream here. I really appreciate y'all being here. If you wanted to support me, the main way to support me, I don't sell anything. Just go subscribe to my YouTube channel. Go leave a comment, say, hey, I came from the YouTube stream. I appreciate you or something. I don't even know. Just go. I'm also streaming on YouTube as well. So if you missed anything, you can go back and watch the stream or something. So I really appreciate y'all being here. I hope you have a great rest of your night. I will be live tomorrow. We literally stream every day, twice a day, sometimes even 3 times a day. So we'll be live tomorrow 2 to 3 times. So yeah, I hope you guys have a great rest of your day. Y'all are the best. I'll see you guys in the next video. Oh, and if you want to download any of these apps, like this app right here is called Moomoo. It's in the link tree in my bio. It's the first link there. Oh, and also full disclaimer, there's a bunch of people impersonating me on TikTok. This is my only TikTok account. I won't follow you. So, and I will never ask for anything. There's a bunch of people impersonating me. So watch out for those. Thank you. See you guys later. Y'all are the best.